As a finance professional in a disrupted business landscape, what does it take to be in demand? What does it take to attract great paying international roles? If you're an ICAN member, it'll just take one exam. That's all it takes to complete the globally recognized SEMA professional qualification and the internationally respected CGMA designation. As a SEMA member and a CGMA designation holder, employers will look at you as a finance professional, constantly acquiring new skills to add value to the business. That's why they'll be willing to pay premium to hire and retain you. If you have 5 years of relevant experience and are an ICAN member, you can directly sit for the final exam of the SEMA Professional Qualification, the Strategic Case Study Exam. Start studying the SEMA Professional Qualification. Prepare to make an impact.
Good evening to my professional colleagues all the way from Lagos, and you are welcome to another episode of ICAN on Air, your great platform for learning, powered by the Institute of Nigeria. I'm your host for today, Tosin Yakinwumi, and today, Thursday, 11th July 2024, we are looking at another topic, which is a contemporary and emerging topic. Analysis of the Withholding Tax Regulations 2024, Unraveling the Complexities. And I have here with me a distinguished professional, an amiable tax expert, a partner and West Africa tax leader in Deloitte, in person of Mr. Yomi Olugbenro, FCA. So sit back and relax. Don't go away. Tell a friend to tell another friend that the show has begun. And you can't afford to miss this special episode of this day, because we are talking about a new and contemporary topic. Let's quickly go around this commercial. I'll be right back with my guest. Don't go away.
The Institute of Chartered Accountants of Nigeria, Canada District presents the 9th International Accountants Conference, themed Strategic Upscaling of Accounting Profession within the Dynamics of Technology. Date 16th to 20th July 2024. Time is 8 a.m. to 4 p.m. daily. Venue, Best Western Premier Calgary Plaza Hotel and Conference Center, 1316 33 Street NE, Calgary, Alberta, T2A 6B6. Seasoned speakers like Sheyi Wolabi, a partner at MNP Calgary, will be speaking on review of the accounting profession and technology synergy. Derek Greer, the Chief Information and Security Officer and AI Upscaling for Accountants. Greg Howe, the CEO, Black All Systems Calgary, will be speaking on accountants in the era of diversified profession, while Professor Godwin Emmanuel Oyedokun will be speaking on decision-making optimization through data mining. The Canadian High Commissioner as well as the ICAN President will also be in attendance. This conference promises to be value for your time and money. Hurry! Register today by sending an email to Mr. Blessing Familusi, Chairman at icancanada.net, or St. Badamosi at ican.org.ng, or iAdams at ican.org.ng, or simply visit our website www.icancanada.org. ICAN Canada Conference 2024. Be there.
Security is key to national development and growth. No nation can be truly economically successful without peace and stability, or when its security is threatened. This is why we must perform our civic obligation of duly paying our taxes so as to provide the needed resources for government to secure our lives and properties. When we pay our taxes, government is provided with the needed resources to equip our security agencies for a safer Nigeria. The money we pay as taxes is used to purchase equipment and hardware, invest in intelligence and other sophisticated technology, as well as cater for the welfare of all security personnel. A secure nation is a prosperous nation. Nigeria is safer when we pay our taxes. FIRS, it pays to pay your tax.
Welcome back to ICAN on Air, another episode for today, 11th July 2024. On the 1st July precisely, we woke up to the news of a circular from the office of the Honorable Minister of Finance and Coordinating Minister of the Economy, Chief Wale Edun Hoefa. And the subject of that circular was deduction of tax at source, withholding tax regulations 2024. And on this note, I welcome our guest on the show today, Mr. Yomi Olugbero, FCA, who is the partner and the West African tax leader at Deloitte. Mr. Yomi, it is a pleasure to have you on the show today, sir.
Thank you so very much, Tosin. Good to be on the show. It's been a while, but good to be back. Thank you for the great work you're doing, and good to be here. Good evening, everyone. Good evening, professional colleagues.
Thank you very much. Mr. Yomi is the golden fish, of course, but let me just quickly take his brief profile for the purpose of those who possibly would need to know him better. Yomi Olugbero is a partner and the West African tax leader at Deloitte, member of the firm's West Africa Exco, as well as Deloitte Africa Tax and Legal Exco. He holds a first degree in accounting and master's in business administration. He is an alumnus of the University of Manchester in UK, fellow of ICAN, fellow of CITN, and also fellow of CIS. He is currently the chairman of the Board of Tax and Fiscal Policy Management Faculty of ICAN, and a member of the Presidential Fiscal Policy and Tax Reform Committee. He has also served as member and dean of different faculties of different professional bodies, including Board of Indirect Tax Faculty and Board of Taxation Standards and Practice Monitoring Committee of CITN, as well as Consultancy and Information Technology Faculty Committee of ICAN. Dear colleagues and viewers at large, that is a brief profile of our guest on the show today. So sit back and relax. Like I said, the topic for today is analysis of withholding tax regulations 2024, unraveling the complexities. It's what the Gen Z will call lahot. Lahot. We didn't want you to get cold at all. As you are receiving the circular, ICAN, as you know, a foremost accounting institute in Africa, decide to quickly take an analysis of it so that the members can actually understand the rudiments of the regulations. And we have brought in a subject matter expert in person of Mr. Yomi Olugbero, FCA, to actually dissect the circular with us today. So once again, Mr. Yomi, it is a pleasure to have you on the show.
I'm most pleased to be here. The honor is mine. So let's get right to it. I'm eager to have the conversation as well.
Thank you very much. So I kick off this way. In the words of Lord Bramwell, one of England's most distinguished judicial members of the House of Lords, he said, like mothers, taxes are often misunderstood but seldom forgotten. And having you on the show today will bring to our global viewers and make them to have and share in your depth of knowledge, skills, and experiences. So I will ask, apart from government, the word tax is distasteful, dreaded, and somehow repulsive to many individual and corporate citizens. So my question to you is, why is it so? And why, or what is the reason for the unwarranted stigma about tax and taxation?
Well, that's an interesting question. I think to keep it very simple and basic, it is difficult enough for anyone to earn money, or to earn revenue. So whether you are in business, or you are in paid employment, the process of having to fend for yourself, make money, keep your business afloat, it's itself very difficult. And so it can be a painful process if you need to share part of that wealth with someone else, particularly the government. And it's the same everywhere in the world. Nobody, pay tax smiling. You pay tax because there is an obligation to do so. You pay tax because is going to be generally applied, for common good. You pay tax because you also have the sense that you will benefit from the social services that that will be created or be generated by it. So that's I mean, generally that's the constraint. But if you then situate it within the Nigerian context, there are valid questions why people sometimes feel like this burden of taxation, sometimes if they can find ways around it, there is a question of social contract that's supposed to be between government, and the taxpayer. So taxpayers will ask question, legitimate question. How is the taxes I'm paying, how is it being used? How fairly is it being used? How about some other responsibilities that ordinarily I would have expected to be shouldered by the government that sometimes as taxpayers I still have to be involved in, providing security, health care, different kind of things. So those constraints are generally the issues. But the truth and the honest position is that it's always a chicken and the egg thing. All right. So which one comes first? So do we want to wait until government is so forthright and has done all that it needs to do before we comply with regulations, or are we going to see the obligations as imposed by the law as something that everybody has to discharge? And when we do that, we continue to engage, we continue to ask questions, we continue to be involved in governance. So that's how I see it. I mean, two wrongs can't make a right, right?
Exactly.
And especially when there are specific laws that will be broken and be violated and are penalties for such infractions, it's important that everybody, first of all, try as much as possible to stay in the right, be compliant, and then continue to engage, continue to ask legitimate questions of your government about how tax revenues are being used.
Thank you very much. Staying in the right and being compliant is what you have advocated for this day. So that takes us gradually into the topic for today. What is withholding tax? What is the withholding tax act in Nigeria all about? And can we then say that this withholding tax regulations 2024 has totally overridden the earlier withholding tax provisions under PITA and CITA as amended?
Right. Thank you for that question. So, and it's a very important place and useful point to start with. So, we really don't have a separate withholding tax act or withholding tax law. And withholding tax itself is not a separate type of tax. It's actually a way of administering the various income tax laws that we have. So what you have is that in the substantive income tax legislations we have, i.e., the Companies Income Tax Act, the Personal Income Tax Act, the Petroleum Profit Tax Act, as well as the Capital Gains Tax Act, we have provisions that allow government to have early access to tax liability, part of the tax liability that a taxpayer will ultimately pay at the end of the year, because say, for example, the Companies Income Tax Act, so 6 months after your year end is when you're supposed to file your tax returns. Most companies that use December year end will mean by 30th of June. Now, government is a continuum. Government needs to provide service from January through December. And so in order to avoid waiting till 30th of June for all of the income tax liabilities of companies to be paid once, there are provisions within the Companies Income Tax Act that says why the transaction is ongoing as you engage, in buying or paying for goods or paying for services, part of the tax liability that should be due should be deducted in advance from the income due to, the provider of the service or the one supplying the goods and services, and you pay it in advance to the government. So withholding tax itself is an advance for payment of income taxes. So the person you are having the transaction with, on behalf of government, will deduct a percentage of your income or of your fee and pay it in advance to the government as a part payment of your tax liability. So when you then get to the point where you are filing your annual tax return, either as an individual or as a company, you then deduct the portion that has been so deducted in advance and remitted to government, and you only have, the balance to pay. And in a few cases, it could even result in having overpay, and then you are theoretically entitled to a refund. So that's how the withholding tax, that's how it operates. Now, but because there are sections of different income tax laws, there have also been different guidelines, different regulations as to what rates to apply, which service is eligible, which items should be covered, and it has become a little bit complex. And there are just so many aspects of the withholding tax practice that have become cumbersome, to taxpayer. One of it, you have multiple references. You don't have one single consolidated point to say, pick this document and you will see everything you need to know about withholding taxes, because changes happen on a regular basis. Guidelines or circulars are issued at different times, laws are amended, and it can become a little bit overwhelming for taxpayers to know where is the single pot of truth as far as withholding tax regulation is concerned. That apart, we've had challenges with ambiguity in rates, because many of the extant laws have been in existence for decades. And so sometimes there's lack of clarity as to which service is covered and which services are exempted, what rates to apply, and whether those rates are even ideal, for the type of business. You have some businesses that have very low margin, and then the rate of withholding tax is so high that even when you do your filing, you are likely going to be perpetually in a refund system. So all of those complications, and we all know that refund system basically don't work easily, in Nigeria. So all of those challenges, including gaps that have been created in the law, where some transactions could almost avoid liability to withholding tax against the intention of government, because those laws have become not fit for purpose because of the changing in business dynamics. So all of that complications is what this withholding tax regulation has now helped us to solve. We now have a single pot of truth as far as every regulation relating to what rates, what services is covered, what services are exempted, dealing with all of the ambiguity, and just simplifying the process. And that is the reason why, quite across many taxpayers and practitioners, it is really one development within the tax space that everybody is cheering. It's more positive, it's more incentive to the taxpayer, it's more relief than being a punitive measure. All right. It looks like the anchor, I'm not sure whether you can hear me, or whether it's my own connection that is a bit disrupted. So if anyone is online and you can still hear me, it would be helpful if I can just have a chat on the comment to be sure that I'm the one that is still live. Okay, all right. So I think Tosin is back.
Yes, I'm back. That's just the next.
I tried to do a little bit of the moderator work when I couldn't hear you. I was wondering whether you are the one that is off or I'm the one that is off, because I could hear myself, I could see myself. I need to be sure that others are hearing me. Thank you.
Okay, thank you very much. I think the summary is that we now have a single point of truth, like you rightly put it. But just to be sure that the old question, this last part, which says that, can we now say that this withholding tax regulation 2024 has totally overridden the withholding tax provisions in PITA, CITA, PPT, and CGT?
Right. Well, yes and no. So, like I said, this is a regulation. This is guidance as to how the provision in those sections will be operated. All right. So the fact that there's a liability to withholding tax, there are charging sections, there are sections within the various tax laws, income tax for both individual and companies, and the capital gains tax. So what these regulations have now done is it talks about timing, it talks about the rates to apply, it talks about people that are covered and people that are exempted. So yes, this new regulation has consolidated all of the regulations that you have, and that have been issued at different times. It is not meant to replace the provisions in the substantive act. It has only provided the guidance and the regulation as to how they will be implemented. So if there is anything that this regulation has replaced or consolidated, it is the various regulations that have been issued, because the provisions are still contained in the various substantive income taxes that deals with the fact that withholding tax should be payable. So this regulation has now said who should pay, when should it be paid, what should be the rate, which services are covered, which services are exempted, which is in exercise of the power that is available in each of those enabling acts, that the minister can actually issue regulations and guidelines as to how specific taxes are to be implemented. So that's what has happened.
Okay. Thank you very much for putting that in proper perspective. Another question I will be asking now, though it looks a bit simple, but my personal experience has also shown that it could be confusing to some accountants. I've had some experience such that some accountants will say, if VAT is included on an invoice, then you need to take withholding tax. If VAT is not included, you don't take withholding tax. Or I've even heard somebody saying that no. Even when withholding was 5%, when VAT was 5%, rather, you hear them say, just take away that 5%. That is the VAT you are taking away. So my question, straightforward, is that what is the key difference between withholding tax and value-added tax?
Right. Thank you for that. So there are completely two different concepts. Okay, I don't want to use the word tax. All right. So VAT is an indirect tax that is levied on transaction, on consumption. All right. It's an additional tax. So if you issue an invoice that is 100 naira, you're supposed to add VAT, currently at 7.5. So it will be 107.5. Now, whereas withholding taxes, which is not supposed to be a different type of tax, is a way that government uses to get an advanced portion of your income tax on a transaction by transaction basis. So meaning, number one, it is not a separate tax. Number two, it is not a replacement for VAT. Number three, it is only applicable where the income itself or the taxpayer itself is liable to income tax liability, because it's an advanced form of income tax. So if that income is exempted from income tax, or the individual is exempted from paying income taxes, there ideally should not be withholding taxes that should be deducted, because it is not a separate tax. It is only a portion of your income tax that you are paying in advance. The scenario you described, what happened was that prior to 2020, 2021, when we have the new finance act that changed the VAT rate from 5% to 7.5%, there is quite a lot of service that is popular with people, that the rate of applicable withholding tax used to be 5%. So the VAT then was also 5%. So if you pick a transaction that was 100 naira and that is liable to income tax, and you add your normal VAT, it brings the invoice value to 105. Now, when you want to apply the VAT rate to that same transaction that was then 100 naira and the rate of 5%, you will apply 5% of 100. And so you will deduct 5 from 100 and you are having 95. And when you add the VAT to it, you get 100. So that oversimplification by people who are not very informed assume that when you give me an invoice of 105 that is including VAT, just take away the VAT. To some people, it is the VAT you are not paying, whereas it is not so. You're actually paying 5 naira for the VAT, but you are deducting 5 naira withholding tax and paying to the government. But they kind of compensate because they are equal. But now that the VAT rate has changed to 7.5 and there is no specific transaction, at least local transaction, except for some DTA related them, that will have been 7.5, that confusion started fading away. Now most transactions are either 5 or 10, or in the new revised regulation where you have some 2. So you have a 2, you have a 5, you have a 10. There is a possibility you will have a 12.5 or a 7.5 when you are relating with countries with which Nigeria has treaties, and depending on the rates to deduct. So, but they are not the same. They are two separate transactions.
Okay, thank you very much. You agree with me that we need to demystify that because we also have some of our student members who listen to this program, and they need to be well informed of all they should know. So let's now go deep into the Withholding Tax Regulations 2024. As an authority on tax and on tax matters, what are the step-by-step or point-by-point changes that the 2024 Withholding Tax Regulations have introduced, and what are the possible takeaways for individuals and corporate citizens in particular?
Okay, quite a lot has changed, and like I did mention, a large portion of those changes are quite positive. So the first is that we have clarification or explanation or definition of certain terms that have previously been confusing. If anybody is talking about withholding tax to you in the past, you would easily get conversations, around over-the-counter transaction is exempted, but what constitutes over-the-counter transactions? All right. You have terms like transaction in the ordinary course of business. What does this mean if they're supposed to be, exempted from withholding taxes and the like? So in the new regulation, we have some definitions or clarifications. Not everything that needs to be defined have been defined. You will always have those lacuna in the law. So you have clarity now that over-the-counter transactions is exempted from tax. And by over-the-counter transaction, it means you're walking into a store or a mall, no pre-existing contract with the supplier, and you pay cash across the counter, or you transfer fund, using your debit card or your or bank app. It's clearly defined that you don't have. Now okay, thank you. I'm saying a slide that is being presented. So this slide that you have on the screen, which I'm sure our viewers can follow, for example, lists for us transactions that are exempted. This wasn't the case before, or in a few cases, it was not as clear. If any income is not liable to income tax, it is now explicitly clear in the law that no withholding tax is applicable. Across the counter transaction, like I explained, no withholding tax. Reimbursement of expenses, no withholding tax. If you pay insurance premium, before it wasn't so clear. It's just bargaining and conversation with tax authority as to whether it should or it should not. So the law had made it now very clear. Another one that is very interesting is you see number 5, interest and fees paid to a Nigerian bank by way of direct debit, because interest itself in the withholding tax law is a transaction liable to withholding tax. So it used to be a dispute when banks do direct debit, for interest on loans and fees. Now the law have made it very clear that there is no withholding tax. You also have exemption for manufactured goods or goods that are produced. So when someone is selling a product that company itself manufactured or produced, it is seen as in the ordinary course of business. So you will have seen some headlines in the past that says manufacturers, agri businesses are exempted, from withholding taxes. All right. So that's part of the changes. So commission retained by a broker, from monies collected on behalf of the principal in the line of the same industry is also exempted. When you have winning from a game, that some of these reality shows that we have, if that particular show is to promote entrepreneurship, academics, technological or scientific innovation, it's exempted. It's different from some other kind of reality show that don't fall within this group. All right. If you are importing goods and the transaction does not create taxable presence for the non-resident, there is supplier, there is no withholding tax. PMS, AGO, those supplies, there are no withholding tax. So you have list of exempted transactions. You also have small businesses, that have also been relieved of the obligation to deduct withholding taxes, provided that the supplier have a tax ID and the transaction is below 2 million. The idea is to simplify the process such that it's not this basic, I pay 100,000, I pay 200,000, especially now that there has been devaluation of currency. So if you allow everybody or request everybody that has, sold or render service, charge them with the obligation for withholding tax deduction, they're just going to be inundated with some small transactions. So you have all of that. The other key changes, I think there's a slide before this that I saw shown just now that provided the rates. So what you will see in terms of the changes that has happened is that, unlike before, we only have two classifications of persons liable to tax. You are either corporate or you are individual, and and partnership, and you have different type of rates. With the new law, you now have the classification into like 4 headings, and then group into 2. There is a classification for resident individual or resident non-corporate entity and corporate, and then you have non-resident. So that table gives us, if that table can be displayed, I think it will be helpful. That table shows you what the old rates are and what the new rates for each of the transactions. For example, for dividend and interest, it remains flat, unchanged at 10%. But for royalty, for example, you have royalty withholding tax rate that is applicable to non-corporate reduced from 10 to 5. All right. You have transactions like supplies of goods and material other than I don't know whether that table can be shown, because I think it will really be very helpful for people to follow through. Yes, this is the table I saw now. Yeah, quite very helpful. Now, there are a number of businesses that the margin that they make on their businesses or from their businesses is so small that if we continue to apply the old rate, they are likely going to be in a state of perpetual refund. And so what in the new withholding tax regulation, what was done is that the rate applicable to them was reduced. For example, if you look at that, the one listed as number 5, all right, supplies of goods and material other than by manufacturer or producer, which we said are exempted, was 5% before for corporate and 5% for non-corporate. In the new dispensation, that has been reduced to 2% because of the understanding that their margin is low. You also have, like number 7, supply or rendering of services other than those specifically listed. So 2% for non-corporate, and then 5% for resident, and 5% for for non-resident. What you will see is that in a few cases, the applicable rate for certain type of transaction for non-residents sometimes have increased slightly compared to their resident counterpart. What happened in such cases is that deduction is more or less the final taxes, all right, or final tax that's supposed to be applicable. We also have service like that, like director fees, fees that are paid to director. If you are a resident, it's 15%. Okay, if you are non-resident, it's 20%. Why the increase to 15%, or why 15% and not 10%? The thought is that the effective tax rate for people within that band will hover around that kind of 15%. And in order to make sure that nobody is escaping tax by not disclosing director's fee income and all of that, the rate was moved to be as close as possible. So generally, if you look at this table, you will see that it's a lot more beneficial, especially when you then consider it together with some of the exemptions. The few cases where we have had the provision to have created a stiffer, situation for taxpayer is really to fight avoidance and aggressive tax planning, by taxpayer. For example, if you don't have a tax ID, all right, and the supplier doesn't have a tax ID, and withholding tax is supposed to be made from that transaction, you will suffer penalty of paying double the amount that you should have paid. So what is the remedy for that? Make sure you have tax ID, all right, so that you don't have penalty being imposed on you. There are also instances where if a small business is supposed to be, exempt a transaction from withholding tax, 2 conditions must be met. The supplier must have a tax ID, and the transaction must be below 2 million naira. So again, the drive is to make sure that everyone gets a tax ID, because you don't really need to be penalized if you have a tax ID. We also have specific provisions for people who withhold and remit, and fail to remit, all right, or those who deducted and fail to pay it over to the government. There are administrative penalties. So the few cases where the penalties, where the provision appear to be more stringent, it is actually to deal with those who are non-compliant, and that is the general feel. Before I start, I think one other major provision that taxpayer will find extremely cheering is the new arrangement for how to claim your withholding tax credit notes. In the past, if withholding tax is deducted from your transaction, as a taxpayer who has suffered that taxes, you will have to wait until the person who deducted had paid it over to the government. All right. And they have paid it over to the government and the credit is available for you. That is the only time that you'll be able to utilize the credit against your own tax liability. But in the new arrangement, the law now requires the buyer of the service who is deducting from you to issue an invoice to you for the VAT. And that invoice is all you need to tender to the tax authority and claim your credits. You don't need to wait for somebody who deducted from you to pay it over to the government, because that is an obligation between the taxpayer, between the tax authority and the person who has deducted. If I have suffered taxes and I have evidence to show that someone has deducted, I just need to tender that receipt to the tax authority and I will get my credits. So between the tax authority and the person who had deducted, there are provisions to deal with if it doesn't remit on time or if it doesn't deduct at all, and all of those kind of provisions. So I really will encourage taxpayers to familiarize themselves with the regulations. There's many of the professional services firm will issue tax alert. Deloitte has a fantastic tax alert on this that try to simplify and break it down. They can get hold of those tax alert, they can get hold of the regulations and take advantage of the key benefits. A number of people have also spoken about the effective date, right? Because the regulation just became known to most people this month, maybe from the first day of July or second day of July, and the effective date is also supposed to be 1st of July. There are arguments that we are not allowing the 90 days, notice period, which is what our tax policy says, and just to provide advance notice to taxpayer and all of that. And for me, it's almost like I don't know which position to take. On the one side, I want advance notice. I want taxpayer to prepare themselves for it, but because many of the changes are beneficial to taxpayer, so I really don't know whether I want to delay the effective date. So if it's beneficial to the taxpayer, I want it started right now. So I would just ask that taxpayers, people get familiar with the new regulations, and if the effective date remains as 1st of July and there is no change, it's a lot more beneficial for the taxpayer, and so we can begin to take advantage of the incentives.
Thank you very much, Mr. Yomi Olugbe FCA. That's a very deep one regarding the analysis of the withholding tax regulations 2024. Talking about the rates, talking about the exemptions, talking about the credits processes and all that. I think the best advice you have given here is that professionals should go ahead and familiarize themselves with that regulation. Thank you very much. Let's quickly go over to our audience and quickly see those who have joined us on this show. We have Akeem Kolade joining us. We have Sonny Abdulakim all the way from Kano. We have Olayinka Agbokeye, Fagbero Esther, Suraju Ibrahim live from Kaduna, Olapeju Olaifa. We have Grace Vine, Morenikeji Onoderu all the way from Lagos. Ayepada Saliki streaming live from Port Harcourt. Choson Olusoji from Abeokuta in Ogun State. A lot of people have joined us on this program. Lydia Tolulope from Ijebu-Ode and all others. They actually want to get the first-hand information which ICAN has brought to their attention, saying analysis of the withholding tax regulations 2024, unraveling the complexities. Please, I've been seeing your questions. Go ahead and send in your questions. I promise you, Mr. Yomi Olugbe is on seat here to do justice to your question. And now moving back to Mr. Yomi, I think Mr. Yomi is just a prophet, because my next question is what you just answered in the last part of your analysis, talking about the effective dates, because that argument has been going on to say, oh no, the tax policy has said there should be 90 days for every tax laws or regulations that has been issued. Similar thing happened for the Finance Act, which was issued under President Buhari, where people made a case for that 90 days, and it was suspended. Then that 90 days was allowed to run before we eventually have it out. But now the policy came in and it came into effect almost immediately. So is it because it's beneficial? But I think I heard you say, I think you also share that sentiment, that could be because it's beneficial to taxpayers. Maybe that's where we're having it. But don't you think as professionals that maybe companies or individuals could have issues in terms of compliance, or there could be a legal aspect to it by we not complying to the 90 days as stipulated by the tax policy? What do you have to say on this?
I totally share the concerns regarding effective dates. Something that is very germane to taxation is certainty, right? In many jurisdictions or dealing with, multinationals around the world, I've never really had so much of concern about rates of taxes in Nigeria in a number of cases. Part of the question has always been certainty, clarity of the rules, and all of that, because at the end of the day, every business model will be built around what the regulatory provisions, are. So for that, the national tax policy itself did advocate that we must give taxpayer sufficient time to socialize their system, and get familiar with the law before it become implemented. This regulation that we're talking about, if businesses describe for you some fundamental changes it will require in their business, you'll be surprised. All right. Rates are automated on the system. Someone needs to get the provider of the service that help them with the implementation of the technology to come and change the rates. The accountant or the CFO practically can't just open the ERP or whatever system they are using to just change the rate. Someone needs to be invited to come and do it. There has to be negotiation, with the service provider. You need to, train your people. You need to socialize with your clients and customers to let them know that things have changed. So all of that require time. And that's why there is a requirement that a minimum of 90 days should be allowed. And so I ordinarily would have, expected that we have that same 90 days. But you should know that this regulation is actually late in coming. It's one of the quick wins that the Committee on Tax and Fiscal Policy Reform had recommended. I think the advice has been had gone into the system as far back as maybe October or November last year. But you know that before changes are made this way, they have to go through different kind of reviews, different kind of approvals from the Finance Ministry to the chief law officer for the federation, and all of that. So that process is what has delayed it a bit. I am assuming that in the original draft that was going on, perhaps it was probably contemplated that regulation will have made it to the open much earlier than 1st of July. So, and there have been a lot of comments in the public. So, like we have seen with other regulations, maybe if this regulation has created more punitive provisions, maybe government will have been compelled, to listen. But because it's more beneficial than the other way around, so it's a little bit of a mixed bag, of feeling. So government will not mind, I will expect, to allow the 3 months, but are taxpayers willing to allow extra 3 months before they start taking benefits? So for me, on the balance of all of that, I'm actually on the side of allowing this implementation to start, because I want the benefits to start getting to taxpayer like since yesterday. I don't want a reduction in rate. So it's bad enough that a few transactions in the first week of July could have been done at the old higher rate. Let's get it started as quickly as possible. That would be what I will advocate. I will have been one of those who will have screamed, to the high heavens if majority of the provisions are more punitive. But I hear and I understood and I agree totally with all of the concerns around certainty. I think it's something we should do. We should sustain. Is the right way to administer taxes.
Okay, this is the right way to administer tax. Yomi Olugbenro, FCA. Thank you for that submission. It's been taken that lack of practical policy implementation is been identified as a bane to Nigeria's growth and progress. And you've been a Nigerian living in Nigeria and also a knowledge coach that you are. How optimistic are you that this withholding tax regulations 2024 will be implemented without negative interference?
No, it will have. I don't have any doubt at all that this will be implemented. It came right from the desk of the Minister of Finance and the coordinating minister for the economy. So it's not just an agency that you'll be grappling with whether it's got the authority to do so, and all of that. And the minister exercised the power granted to him under the ex-ante legislations. The chief implementer, the agency of government to implement this, which is the Federal Inland Revenue Services, is an agency that is directly under the Ministry of Finance. And I expect and I know that this regulation, the FRS has will have taken part in reviewing and in also seeing what is coming. So I really do not see where the challenge or the pushback will come from. But in any event, it is the right or the obligation of each taxpayer to ensure that his tax position is treated strictly in line with the law and with the regulation. So if by error of omission or refusal to accept a reduced rate, any tax authority is asking for a rate that is higher than what the regulation has said, or is asking for services that have been exempted to be taxed, it is absolutely within the powers and the right of the taxpayer to refuse, to challenge, and if necessary, find professional services provider to defend them. That's what I do for a living. So I'll be I'll be happy to engage with tax authorities to look. Let's look at ourselves face to face and tell me why services have been exempted. You are asking taxes to be paid. Tell me why a rate that has been reduced in the regulation, you're asking for a different rate. And I don't really expect that to happen anyway.
Okay. And just a follow-up question, like you mentioned that's exactly what you do. So let's talk about the opportunities for chartered accountants on this withholding tax regulations 2024. What are the opportunities that are bound for chartered accountants, and how should accountants equip themselves to take advantage of the opportunities that could abound?
Thank you so much. The first is exactly the what we're doing. I believe majority of our listeners today are either chartered accountant or finance professionals, or people who have some bit of affinity for numbers and consequence of business. The most important thing when it comes to taxation is knowledge. You need to be aware, you need to be abreast of the law, because just like the question you just asked, either out of error of omission or just wanting to push their law, it's not impossible for assessment to be higher than what the landing position should be. It is your knowledge of what your rights and your obligations are that is required to be able to defend yourself. So knowledge is important. I've told people severally that if you have been a chartered accountant who have practiced law, taxation, maybe you've been a chartered accountant, or you've been practicing, let's say, prior to 2020, or you have had a little bit of break. Almost everything you know about taxation has changed, with all of the changes that were introduced through the Finance Act, and it's an evolving space. So you need to be familiar, and as professionals that are going to help clients, all right, either as an in-house accountant or tax manager, and all of that, or you are advising, knowledge is your tools of trade. So that is extremely important. The other is using that knowledge to then help clients create a business opportunity for professionals. Businesses are looking for where to save money. Businesses are looking for how to optimize their tax position. So if you go to your client to say, look, the reason why this business model wasn't working in the past was because this was the applicable withholding tax rate as at then. There is a new provision that says you can get 2% off or 3% off or 5% off. The client will be excited. And every conversation that leads to reduction in obligations excite the client, add more to the bottom line, and create an extra opportunity for you to get rewarded from a professional fees perspective. Tax is a professional service area where it is extremely easy for you to demonstrate value, because you can tell the client that this advice, this help, this assistance, this is the amount of saving, in dollar terms, in naira terms, in whatever currency that you're going to get from it. And you offer those advice for a fee. So chartered accountants or professionals on the call should see how to help their client leverage the opportunity so that part of the saving, part of the value that the business has generated can be shared with you by way of professional services, by way of helping them with some other things. I can tell you that there are several businesses that could have been moribund because the old withholding tax rate doesn't just make the business easy for them. Construction companies, telecom companies, some companies that are doing trading with a very small margin. Many of those businesses, were tough to operate under the old regulation because the rate of tax was higher. But now with the reduced rate, it's an opportunity for them to go back. So we need to dust up our list to say, which are those businesses that have to exit or change their business plan because of the tax rate, and they can benefit from it. So that's how we can take advantage of it.
Okay, that's how we can take advantage of it. And also, that knowledge is the tool of trade of the professionals. Let's quickly go and take some questions from our audience. Amaka Iberechi Ekei, does this mean we shouldn't make use of vendors that don't have TIN? Because when we make use of them, I usually remit it without their TIN. Mr. Yomi, quickly on this.
Yeah, so if there is a way, if it is not a seller's market, you can limit your headache by ensuring that part of your KYC, know your client, is that you are dealing with a vendor that have tax ID. I think certain level of standard should also be set where your business is that reputed. I know several businesses that will not take you on. They won't onboard you as a vendor if you are not a compliant vendor from a tax perspective. So where you can, you do that. But the law also make provision for what you should do where the vendor doesn't have a tax ID. For example, if it's a transaction that ordinarily should have been exempted, let's say that transaction is below 2 million naira and it's for an SME, you ordinarily should not have deducted withholding tax if there's a tax ID. But if it doesn't have tax ID, the law says that transaction will not be exempted. So you apply the withholding tax. For transactions that are not by SME, the law says there will be a penalty that is double the amount that is supposed to be deducted. That will be deducted just because you don't have a tax ID. So I think you socializing with your vendor and letting them know that there's a repercussion, there's a penalty. If I'm supposed to deduct 5%, I will deduct 10% from this transaction just because you didn't provide a tax ID. And getting a tax ID is a quick, free step. Very quick, you can get your tax ID almost immediately at no cost. So why do you want to penalize yourself by having to suffer double the amount of withholding tax or forfeiting your exemption completely just because you don't have a tax ID?
Okay, thank you very much. Let's pick another audience question. Edache Anoye Harmony is asking 3 questions. Let's take it one after the other, but I'm sure they are related. Is that in a related party transaction, the new law says remittance will happen the earlier of when payment happens or transaction recognized in the books. So his question, what happens if the liability goes bad and written off? That's question 1. Question 2, if withholding tax becomes the final tax for non-resident company, will a non-resident company still be required to prepare accounts based on SEP rules? And the last question, should I take the last question?
Please go ahead.
Third one, will tax filing still happen on tax promise, considering the fact that a taxpayer is now required to fill and sign a form? Lovely question from Mr. Adachi.
Thank you so much. Yeah, very, very interesting question. So the first one was addressing the time when the obligation to withhold or to pay withholding taxes fall due. So in the original law, it is at the earlier of when payment is made or the invoice is recognized. That's loosely put. That's how the provision is. Now, the new provision is even a lot easier because you could have a situation where an invoice has already been booked and the payment is not made until 30 days, 60 days, 120 days, depending on your payment term. So based on the old law, as soon as you book an invoice, you are looking for money to go and pay the government. The new law says no. It is now the earlier of when the payment is made or the invoice is otherwise settled. So that's one of the things that made me say it's a beneficial change. It then says, except in the case of non-resident company, and that it will be the earlier of when the payment is made or when that with related party, you could have intercompany balances, and once you credit or debit the intercompany account, it's as good as that invoice is settled. So just to avoid a situation where in a related party transactions we're saying, oh, cash has not moved and therefore the withholding tax obligation has not arisen. That's what that law tried to do by separating between related party transactions where obligations get settled by way of just intercompany debit and credit. All right, so that's on the one side. Now his question is, what then happened? Assuming we have booked the transaction, cash hasn't moved, but the debt become bad and we're writing it off. What you do is that you apply the transaction, the treatments on how you treat an invoice, that a bad debt. So when a bad debt is, when debt becomes bad and is actually written off, you will get full deduction for that debt as a deduction in your income statement. Of course, all of the rules as to whether this is a general, whether this is really, really bad or you're just making a provision, all those questions will still apply. But I'm assuming that it has been validated that the debt is really bad and you are able to prove it, then you have full deduction for the entire expense, not just the withholding tax element, for the entire expense in your income statement. I don't know whether that question can be brought back. I think the second and number two of the question, if you can just remind me, because I think there are three parts. You are muted, Tosin. Yeah, okay. So I'm saying it now, so thank you. So the second question is, if withholding tax become the final tax for non-resident, do you still have obligation for non-resident company to prepare tax? So what you will notice is that specific instances where the withholding tax by non-resident is deemed to be final tax is typically for passive income. All right. So, but if it's for specific taxes where you have created a permanent establishment or a taxable presence where you're supposed to file your tax return, then your withholding tax will be treated as an advance payment like any other taxpayer. Let's say, for example, a non-resident director, all right, who is not any other income, is paid director's fee, and the withholding tax has already been deducted. In that particular case, the withholding tax deducted on that director's fee is the final. You don't need to file any other personal income tax because you're only earning that director's fee. But if you're a non-resident company and withholding tax is deducted on a transaction for which you have created a permanent establishment in Nigeria, okay, or a significant economic presence issue, and you need to file your normal tax return, your withholding tax will only be treated as credit against your final liability like any other Nigerian taxpayer would do. The third question, there's a third question.
Will tax filing still happen on tax promas?
Absolutely.
The fact that the taxpayer is now required to fill and sign the form.
No, normal income tax returns, company's income tax return, your transfer pricing return is still on tax promas. What the law says is that there's still a schedule, a return of the deductions you make, the remittances you make on behalf of, for deduction you make as a taxpayer to the tax authority. So that does not, overrule the portal that we currently use for normal companies' income tax returns, which is the tax promise.
Okay, that's gotten. Okay, do we still have any other question from the audience that we can take? though our time is fast spent, but this is a special episode, and I can see that people are actually eager to learn new things regarding this regulation. Do we still have media? Do we still have any other question? Lanre Daramola, can you help us spotlight questions from Lanre Daramola or Titi Olu Lanre, please? So we can just take one more and we close from there. Okay, so Titi Olu Lanre is saying, kindly reaffirm the deduction of withholding tax at 2% on goods and services as stipulated in the new publication from Ministry of Finance. Mr. Yomi?
All right. So again, there are the applicable withholding taxes on supplies of goods and services has always been part of the controversial issue. So if you go back to the rate that I shared, or that was projected on the screen, so it provided that I think it was listed as number 5 in that particular place. So supplies of goods and material other than by the manufacturer or producer. So there are 2 reasons or 2 instances where withholding tax may not be applicable on goods. The first is if it is by the manufacturer or by the producer. If you are supplying good, you are the one that produced that specific item and you are selling, so it's seen to be in the ordinary course of business. Withholding tax will not be applicable. The second instance is where that service is provided to a small business, all right, and the transaction value is below 2 million, and the provider of the service has a tax ID. If that happens, you will not. If it is over-the-counter transaction, all right, you walk into a mall or a store, with no prior contract, with no prior arrangement, and you pay for goods or you pay for service, it will not be. In every other cases, 2% withholding tax will be applicable.
Okay. Thank you very much. Our time is fast spent. Your final thoughts on the topic for today. ICAN is always open to ideas that would possibly advance the growth of our members, the accountancy profession, and the global business environment at large. What is your suggestion to fellow chartered accountants on knowledge building and sharing in order to take advantage of these regulations to their benefits and the benefits of their respective organizations?
Thanks so much. Maybe just building on the other suggestions around personal development, and all of that. I expect that in the next couple of weeks or months, there will be MCPs, all right, that the institute will roll out on this conversation, because you could see the interest generated by the number of people online and the number of questions we're having as far as this session is concerned. So they should watch out they should take advantage of any of those MCPs. There is the tendency for many of us as chartered accountants to take, new regulations very lightly. We just think, withholding tax, and we just oversimplify it. I can tell you that big businesses are seeking advice. Big businesses are seeking to understand, how this impacts them. A reduction of 1% or 2% can make a significant difference in business model. So that's how we can add value to our employer. That's how we can add value to our clients. So let them take every opportunity to dissect, to digest, and to understand how their client and their employer can take advantage of this. And I'm believing that also as current chair of the Tax and Fiscal Policy Faculty, I can at least say it without any equivocation that there will be MCP that the Tax and Fiscal Policy Faculty will organize. Some may be free, some will be fee paying, as in the tradition of the institute, to just ensure that members benefit from this opportunity and they equip themselves. So that would be my suggestion. I thank you for inviting me and for the conversation tonight.
Thank you so very much, Mr. Yomi Olugberu, FCA, partner and West Africa tax leader in Deloitte. Thank you so much for coming on the show and for sharing your wealth of experience with our members. We really appreciate your coming.
Thank you so very much. It's my pleasure. It's our institute, and it's always an honor to be part of it. Thank you.
Thank you. Do enjoy your evening. A quick announcement before we go. We have been having members saying, can we suggest topics for ICAN on Air? Can we suggest guests? subject expert guest for ICAN on Air. Why not? The committee has considered your opinion, and of course, you can now send your suggestion of either topics or guests to the email addresses that is being displayed on the show. Of course, they are subject to review by the committee. Next one is that the registration for the 60th ATSWA induction is in progress. The date of that induction is Tuesday, July 23rd, 2024. The fee is 30,000 naira, and the venue is ICAN Center Amuwo Dauphin. Please go ahead and register, and do not forget. And lastly, the 54th Annual Accountant Conference is here. The theme is Governance Reimagined, Mapping the Future. The date is 7th to 11th October 2024. Venue, the Veldrum Moshood Abiola National Stadium, Abuja. Don't forget, go and register so that you can take advantage of the discounts and enjoy the program that will be held, of course, during the conference. And that is the show for today, because I can see that it's been educating, highly instructive, and we've actually enjoyed all the questions and the responses from the guests for this day. Till I come your way again with another guest, please stay safe and stay sound. I am Tosin Akinwumi FCA, saying thank you for watching and bye for now.